Alright guys, welcome back to another educational slash tip video, and today it was a little question I got yesterday on basically the question was, do professional traders actually use different strategies at different times? So let's say when the markets are trendy, right, they will use a certain strategy when that happens, and then when they're in a consolidation phase they'll use certain patterns or trade setups like that. So for this example, I don't know how I'm going to show it or illustrate it, but I'll sort of go along with it. So I'll use a simple pullback continuation trade, right? So pull back, and then obviously you're looking for a retest, and then for a consolidation stance, I'll use patterns for that type of technique, right? So realistically, the answer is no, and I'm trying to explain it to my best of ability. I've never really planned it, how I'm going to do it, so I'm going to improvise. But we never know when the market is trending or consolidating until it's already doing it, right? So if we have something like this, right, it's already trending before, like this is a trend before we actually see it as a confirmed trend, right? So by the time we actually get involved here, let's say on this pullback, well, this trend might have ended and we might be going into a consolidation, right? So now this creates an advanced pattern. This would probably be like a butterfly, whatever, right? So it creates that, but then we would have traded the trend and we would have lost out. Now, of course, we're sort of banking on it carrying on, right? Hence why we trade it, but in reality we never know, and I feel like this video will be quite short because that's pretty much it. But we never know what the market will do and if we're going to be trending still or if we're going to enter consolidation. So the best thing we can do is actually hedge our strategies through that, right? So what I mean by that is we trade both any sort of 3-point move or pullback, whatever, right, which will work in a trending market, and we trade every single pattern that occurs, right? So the reason for that is, and we take every single trade, so we take every single pattern and we take every single pullback that meets our rules for the trend continuation strategy. And the reason for that is, like I said, you don't know when we're going to be in consolidation and when we're going to enter this consolidation, right? There's many times where I've looked for a pattern, a continuation trade, and then out of nothing, right, we get this complex pullback and all of a sudden I've got a better pattern, right? So now, yes, we're in a trending market, but it's an indication we could be entering what's it called, a consolidation, right? Consolidation or even a reversal. And that's why because we never know, you take both of them, and assuming again, they're profitable in the long run, they will even out. So during the bad periods, let's say we got two equity curves, right? Let's say this is my trending equity curve, so it'll probably look something like this, right? It's deeper drawdowns, then boom, because we actually consolidate a little bit more, right? It'll look something like this, right? If we're only doing trending just trend continuation, right? Again, this could be across any pair, any time frame, works pretty much the same, right? Just the theory of it, at least. Now again, you can diversify a bit more after, which I'll go into, but then let's say we've got our consolidation patterns, which right, so our consolidation patterns, which our equity curve might look something like, something like this maybe, right? Just choppy, whatever, doesn't really matter. Again, these are just completely random, it's my best guess, it doesn't really matter. But what would tend to happen is, you see here, right, let me change the color of this, okay, not that one, there you go, right? You see at these locations here, the goal is for this to be a boom period, and that's what it should be in theory, right? And then realistically, what you're going to end up with if you trade both of them is a smoother looking equity curve, because during consolidation your patterns will likely work much better, right? And then during trending markets, your trending thing will work better, while the patterns work worse. So realistically, what you're going to get out of this is something like this in theory. Again, right, it should be much smoother, much more prolific than something like this or that individually. Now you can go through multiple pairs, and the benefits of you going through multiple pairs would be this, right? So if I'm trending, let's say on the pound yen, and then on the Aussie yen I'm in consolidation, right, then you know, again, it works both ways. So one of my strategies on the pound yen will be good, the other would be bad, as in continuation strategy would be good, the patterns will be bad, again, in theory, right, while on the Aussie yen it's the opposite, right? So you've got all of this diversification covering you. So I currently look at 20 markets total, and I do 16 for my day trading, which I don't actually have any consolidation pattern on it, right? So I don't trade any advanced patterns and whatnot, but you'll see that it's quite diversified, because if I'm in trend on, let's say, the pound yen, then yeah, I might hit a win on the pound yen, but I'll probably take a loss on the euro yen because we're consolidating, right? So it goes like that pretty much, and it's all about diversification in my opinion. Yes, you can trade one pair and whatnot, but it's just down to my style. Now on the 4 pairs I've traded for a year now, you know, the pound Aussie, pound dollar, euro dollar, Aussie dollar, right? A lot of that is quite a lot of that is patterns, right? Yes, FTBs are included, but because it's patterns, and they said when we have a longer trending markets, like this year we've had quite trendy markets, they haven't performed as well as they could be, and as well as expected as well. So yeah, I don't know why I'm on a blank screen. At least show you some candles, right? But that's what this is. So like I said, to reiterate the point from earlier, you can't pick and choose when to trade them, because you never know what's going to happen, and you're playing that game of probabilities for the long term. That, look, if you keep on consistently executing the certain plan, then you will have that edge over the market, and then over time it would actually play out in the long term. So yeah, hope that helps. And again, as always, if you do have any feedback, any random questions, any topics you want me to cover, any opinions you want me to give, then just shoot them in, and I'll try my best to do that. So yeah, hope you enjoyed as always, and in a bit.